Welcome back to Buy Now Sell Now, and yes, it's been an earning-heavy season, and let's put the spotlight now on Talbros Auto. The company did come out with a decent set, but what's the way forward? Let's understand all of that from Mr. Navin Juneja, Group CFO of Talbros Automotive, joining us on the show. Hi, very good morning, and thank you so much for your time. Firstly, let's talk about the demand outlook because in the quarter gone by, yes, of course, your numbers have seen almost a flat sort of a movement. But what's the way forward? Because auto industry as a whole has seen that great and massive push coming in from the GST rate cuts, Mr. Juneja. So for the second half of this fiscal, firstly, help us understand how are you penciling in the segment-wise growth?
Okay, good morning and
Morning.
thank you for having me on the show. You are right that in the first 6 months of this financial year, we had a flat and muted growth, I will say. The primary reason for this is because our gasket and heat shield business is primarily catered to SCV, LCV, which was not performed well in this first 6 months. Second reason being the export. One of the major customers in UK got the cyber attack and the production was closed the whole month of September until the 7th of October. So it affected our sale to that extent. Now going forward for the balance year, we see absolute right after GST cut, we see a decent demand in the domestic sector also. Now the export sector is also started picking up, and by the end of the year, we see a 10% growth on the consolidated basis.
All right, let's talk about your order book now. The order book has jumped from 1475 crores in FY25 to another 580 crores in FY26. And you've now moved from winning orders to executing them as well. So we just want to understand how quickly will this execution phase translate into a higher quarterly revenue run rate for Talbros?
You are right. We have got the orders, but more than 1,500 crores. The commercialization of some orders will start in the last quarter of this financial year, and the balance will happen in the next 2 years. In the FY27, we see a growth in the top line between 18 and 20% on that account.
All right, but along with that, Mr. Juneja, let's touch on your exports because exports form more than half of your revenue. We believe that this particular quarter, you had one of your European clients having a bit of an hit with respect to the cyber attack. We are aware of that. Which company are you referring to? But along with that, what's the demand outlook from the European business now that the things are once again seen to be getting back on track, and the US business as well? How are you seeing these two big markets for you to pan out?
So last quarter, we had I think, export low of 26%. Going forward, in next 2 quarters, this should go up to 28 to 29%. And the next financial year, my export should be around 33 to 35% because of the major export order which we received in our joint venture will go into commercialize in the month of January, which is a 100 crore plus order per annum. So thirdly, my export to USA around 13%. And with the news we are getting it, etc., I think the duty will be normalized within the next couple of months. That everything will be fine there.
All right. Anything specific for EV-related orders? Because you have EV-related orders in forging, stresses and rubber worth 160 crores in FY26. How meaningful can EV revenues become over the next 2 to 3 years? And are margins better than the legacy business out here?
First of all, my EV this year is around 3%. And the EV vehicles launched by the Indian OEM like Maruti and Tata is now going to pick up. And we are there in the single source in that. As regards the export customers, where we were dependent heavily on the OE, I think they are deferred their program. Now they are not doing 100% OE. They will go both ICE and EV. So I think going forward, my EV will be around 7 to 8% of total demand.
All right, that's good to hear. But with this, Mr. Juneja, with this, we let you go on that. So good having you on the channel today. Thank you so much for your time.
Thank you.
All right, so that was the management of Talbros Automotive talking to us about the growth outlook going ahead. But with this fears, it's once again time to slip into a very short break. Don't go anywhere. Lots more to talk about on the other side.